All right, let's get straight to it. A reader of the theme set to drive the markets this week. Pete McGuire from XM joining us. Pete, happy Monday morning to you. All right, okay, still the talk obviously is bond yields, where they're going at the moment. Interested as far as the central banks and their take on it, because we're seeing a bit of a divergence, are we not, as far as the Fed? Not a lot of language there, or rhetoric I should say, whereas the ECB obviously voicing its concerns.
Well, exactly, and good morning, Andrew. Good morning, Nadine. So they're different camps completely. We've got that strong move as far as US dollar index back at 92. So from a currency perspective, I feel as though that US dollar will continue to probably have a little bit of uplift and that euro come under further selling pressure. But that's exactly right, Andrew. The differential between the two, you've got federal spending as far as the Fed, ECB, certainly behind the curve, and I think they're probably 6 months ahead of the Eurozone is in the sense of how the Fed's performing at the moment.
Okay, so Pete, you mentioned the US dollar there. Pretty volatile night, as we've mentioned on Friday. So where do you see the US dollar as we start this Asian session and where it's likely to go?
Well, we're at 92, Nadine. So really, over the last 2 and a bit weeks, we're up from that 89.6 handles to 92. I think there's a 92.5 as sometime over the next week. That continued uplift as far as you certainly bond yields, as Andrew mentioned, and the inflation story. So that's all lifting. We've got stronger crude prices. They've been bounced big time. And that's been a trader's delight with strong equity markets. So that seems to be where it's a little bit more updraft.
And we've got stimulus likely. I mean, still has to be voted on by the House, $1.9 trillion. What will be the market impact of that? Has it already been priced in?
I think to a point, Nadine. First off, it's the second largest in US history, and the next part of it, of course, is probably 85%, 90% of it's been baked in. So you might get a little bit of an uplift as far as equities, but I think that good news story's been already cooked into the storyline. So that's been where we're sitting at the moment. I think March could be a nice time for traders to look at those big moves and maybe a little bit more volatility entering the market.
Although the package is without that $15 minimum wage deal, how significant is that, do you think?
Well, I think it's scandalous, Andrew. You've got people out there that need the dollars more than anyone, are the low income earners, and they're the people that have got to be looked after, not government employees that are getting, they're on I think a $1,400 a week, versus these people that are really needing these dollars to survive. So yeah, it's still out of whack in a lot of ways, and hopefully in some fashion or form this year we can see that $15 wage benchmark being introduced. But it's always the little guy, Andrew, that gets hit, and that's being very evident under this administration as it rolls forward. Certainly with crude prices, they're being crimped there. We're seeing the impact they're having across India and other developing markets. How a commodity can go from $30 to 66 in a matter of 4 months defies logic.
Yeah, and correct me if I'm wrong, but when in terms of OPEC, we are still expected to get some further commentary with its oil market report. So that is where we will likely see where OPEC Plus sees demand going forward?
Well, exactly right, Nadine. And first off, from a demand picture, we've seen those strong numbers coming out of China. You're talking about very strong numbers from GDP perspective across India and the sub-basin through Asia and Africa really coming back online, and certainly Africa. So the demand picture is strong. But from a production standpoint and what they're getting, Brent's now at $69.36. Nadine, that's up 60-odd% since the start of November. So, from a trading perspective, traders are rubbing their hands with glee. It's been the greatest time to be in the markets because everyone's made a huge dollar. But from a consumption standpoint, I'm sure it's costing every family far more as far as input costs than when you go to the petrol pump. So that's where they get hit. That's where Main Street gets hit, and they seem to be doing it very effectively.
Yep. Okay, Pete. Looking ahead, Wednesday, we're looking at the latest inflation data out of the US.
Yeah.
What's your expectation? Because there's certainly signs there of price pressures, are there not?
Absolutely, Andrew, and that was the as far as the crude numbers, and that will continue to rise as that inflationary concerned. Hard to put a number on it because every analyst tipped 200,000 jobs for Friday night, Andrew, and we got 379. So analysts aren't real good at picking the market. They're only out 90%. So I'm going to sit on the sidelines and just see how it develops. We just want movement. We want opportunity, and I think that's really what the XM traders are after. So, yeah, inflation will probably start to uptick further. Yields will uptick, and that'll force the US dollar up, and it's a trader's delight.
Volatility, the name of the game there. All right, Pete, have a great one. Thanks for checking in. We'll speak with you soon.
See you, Nadine. See you, Andrew.